Welcome to the Contrarian Investor Podcast. We give voice to those who challenge a prevailing sentiment in global financial markets. This podcast is for informational purposes only. Nothing on this podcast should be taken as investment advice. Guests were not compensated for their appearance, nor do they supply payment in order to appear. Individuals on this podcast may hold positions in the securities that are discussed. Listeners are urged to educate themselves and make their own decisions. This podcast episode may have ads and the occasional announcement. To listen without ads or announcements and take advantage of a host of other benefits, consider becoming a premium subscriber. Visit the website contrarian.supercast.tech. That's TECH for more information. Now, here's your host, Mr. Nathaniel E. Baker.
Les Rubin of Main Street Economics. By the way, this is Contrarian Investor Podcast, Season 7, Episode 1. So you are our first guest in this 7th season of Contrarian Podcast recording. Welcome very much. You have written several books here. The most recent one is called Why You Should Give a Damn About Economics. You have some other writings on your website, and the TLDR, too long didn't read, for our listeners, is basically you are concerned about the U.S. debt levels on our sovereign basis, and that this is going to create problems. Tell me more.
Well, thank you for having me on the program. The concern is more than just a passing concern. We're headed to serious problems if we continue on the path we're on. And that's really why I started Main Street Economics, to try and get people to understand the nature of the problem and how serious it is. The book, Why You Should Give a Damn About Economics, is a primer for people that don't understand economics. It's really like a layman's course. I'm not an economist. I'm an accountant by my early trade, but my business is real estate development. Gotten very involved in economics, and I basically am trying to get people to understand the fundamentals of economics and the serious problems that we're facing right now as a result of reckless fiscal policies for many years.
Right. And so the total U.S. debt is, I don't know how many trillion, and our incomes are from tax receipts and whatever else is obviously far less. Now, us running a fiscal deficit is nothing new, nor is the growing debt. At what point, and maybe we're already there, do you think it gets too big?
Well, here's an analogy that I use in a recent pamphlet that I published, which is free downloads on my website. The debt to GDP is a very critical ratio that people should understand, and that may be the most important single ratio you can take a look at. In the past, the studies have basically said if you have a 60% debt to GDP, you're starting to get into a bit of a problem. If you get to 90% debt to GDP, you have a critical problem. And if you go over that, you're really in trouble. In the past, we have had as much as 100% debt to GDP. That happened during World War II. But that was followed by 2 decades of fiscal responsibility and a growing economy, and that ratio dropped to under 40% over the next 2 decades after the war. Today, the debt to GDP is 125%. And the problem is that the projections are for it to get worse and worse and worse. The CBO, which is the nonpartisan government agency that projects these things, says that it's going to reach 200% over the coming decades. And we have current debt of $36+ trillion. And the forecast is for multi-trillion-dollar deficits forever, given current policy. And that's the optimistic view. It doesn't consider any recessions. It doesn't consider unforeseen costs. It assumes the tax cuts from 2017 will expire, which is not likely to happen. So the debt is not only bad and growing; it's going to get worse as we go along, and that's going to lead us to a fiscal crisis and a disaster, the likes of which we've never seen.
How soon do you anticipate that happening?
Nobody knows. As one of my associates says, only God knows, and God's not talking. Nobody knows when that will happen. My best guess is we maybe have 10 years. It depends on the policies we follow. If we follow the policies that we currently have and it gets worse, I don't see how we cannot hit the wall in less than 10 years. I just don't see it's going to happen, but nobody can really tell you when that's going to be.
Yeah. And those numbers are consistent with, we've had other people, economists and others, come on the show to talk about this. And the ballpark seems to be 5 to 10 years from what they have said. So you're within that range, it sounds like. Now, just to play devil's advocate here a little bit, I mean, the U.S. is obviously not the only country running a fiscal deficit. And you talk about debt to GDP. Japan's is still worse than ours, isn't it?
Japan is a unique animal, and yes, it's far worse. Theirs is like 200% right now.
Yeah.
And I don't quite understand how they survive. They aren't growing. They haven't grown for decades, but they have very low interest rates. And so that makes it a little more tolerable because they keep their savers over there, and they invest a lot in their own debt, and their interest rates are low. So that makes it a little more tolerable. Our interest rates are not only have grown significantly in the past few years, they were arbitrarily kept low for a long time. Now they're getting back to something that's more normal. And if people get concerned, if investors get concerned about our debt and our ability to pay it, the interest rate's going to spike, and that's going to just accentuate and accelerate the problem.
Yeah. But the U.S. also, the U.S. dollar is the world's reserve currency. And so what do you make of the argument that we've had debt for a long time? Yes, the debt levels are growing, but you talk about demand for our treasuries and our bonds, like the various exporting countries, Japan, China, Saudi Arabia, et cetera, have no choice but to buy our bonds. And therefore we can just kind of inflate our way out of this.
Well, for right now, I think you could make the case that we are the world's reserve currency, and we have been for a long time. But there's nothing written in stone that we always will be. The fear I have, and what I see happening, is that at some point investors are going to realize that we can't repay the debt. One of the books that I wrote last year was called The Greatest Ponzi Scheme on Earth. And our debt is that Ponzi scheme. How do we pay our debt, and how do we finance our deficits? We borrow more money. If we couldn't borrow money, we would be toast right now.
Yeah.
For example, last year we had to borrow new borrowings of $10 trillion. About $8 trillion of that was paying off maturing debt, and $2 trillion was paying for the new deficits that we ran. So what would happen if we couldn't borrow, if investors got spooked and we couldn't borrow that money? Where would we be? We would be bankrupt. Right now we're the reserve currency. There's nothing that says we will always be. And at some point, investors may fear that we can't pay it back, which is a pretty reasonable assumption, and stop buying our bonds. If that ever happened, we're done. I mean, we're done. We function financially. And as far as other countries, there are plenty of countries that are in bad or worse shape than us. And I'm not thinking of Japan. I'm thinking of France. I'm thinking of Great Britain. I'm thinking of Italy, which has a terrible problem. Greece has already failed. but Greece was small enough somebody could bail them out. Who's going to bail out the United States? In the pamphlet I just published, our ship of state, the USS Titanic, I make the point is that we're not too big to fail, we're too big to save.
Yeah.
And if we ever get into trouble, there's nobody can come in and save us. It's too big.
Yeah. And it sure doesn't look like there's any fiscal policy on the horizon. I mean, I'm old enough to remember when George H.W. Bush floated an idea of having a constitutional amendment to balance the budget. And it used to be that at least one of the parties in DC was all about fiscal restraint. And that appears to have gone out the window about 20 years or so ago.
Sick of me yet? Become a premium subscriber and avoid all ads or interruptions. Other benefits as well. Visit contrarian.supercast.tech for more information.
And this takes us to the current new old administration. Is there anything there that you see that can potentially reverse this course?
There's a couple of bright lights that I can see. President Trump has not been a fiscal responsibility any more so than anybody else. Since Clinton in the 2000, when we actually had a surplus, it's been progressively worse, and Trump has not been noted for being a fiscal hawk either. And he wants to extend the tax cuts, which I support, but I would support it as long as you pay for it somehow, which they're talking about. Now, the one good thing that I do see is Elon Musk and the DOGE boys. Well, I guess it's just one now. I think Vivek is gone. So it's really just Elon Musk. He's a dynamo. I mean, and he wants to get something done. He may get it done. He says he can cut $2 trillion off of our federal spending. Well, he really can't do that alone. To get that kind of a cut, you have to get Congress involved. And that's the problem. And that's what I've been focusing on, is trying to get the American people to understand the problem, to support some difficult decisions that need to be made in Congress. That's the only way to get the spending down to the levels we need it to be, is to have Congress actually pass laws and modify entitlements and do other things that are very painful politically.
Yes, indeed. And that's the problem, is the political conundrum, right? I mean, I'm pretty sure our biggest spending item is military. Are you really going to go up there and say we should, as a politician, and say we should cut military spending? I mean, how quickly would you be voted out of office if you said that?
Well, the military is not likely to get cut. The bigger cost right now is the interest on our debt.
Right.
That's actually now bigger than the military.
Wow.
And there's really no way to control that. The market is going to determine that, but you could make it better if you had good fiscal policy. Interest rates would come down, and that would make the pain a little less. But when you have $36 trillion of debt and growing, the interest rate is going to be enormous.
Yeah.
And the only item in the federal budget that's bigger than that is Social Security.
Yeah, and
that needs to be reformed. It has to be reformed.
Yeah. I mean, when Social Security was enacted, what was the expected living standard, right? And I mean, they have raised it a bit. They probably need to do more.
If you go back 50 or 75 years, you had 30 people working for every retired person. Today, you have 2.6 working for every retired person. Well, the numbers just don't work.
Yeah.
The system has to be reformed, or it will continue to get worse. So the three big entitlements that need work are Social Security, Medicare, and Medicaid. Those three items cost well over $1 trillion to the federal government every year in losses.
Right.
You have to deal with those, and yet nobody will touch them politically. And that's really what Main Street Economics is about, is to explain to the people that we have to deal with those issues. There will be some pain associated with that, but if we don't address it, the disaster that's waiting down the road when the Ponzi scheme collapses will be far worse than anything we've ever seen.
Yeah. But again, politically, like, I mean, again, if you go up there as a politician, especially one who's up for reelection, and you say, I'm going to cut Social Security, I'm going to cut Medicare, I mean, that doesn't really bode well for your political future generally.
No, right now, the politicians' number one priority, which almost everyone understands, is to get reelected.
Yeah.
And to get reelected, you have to do things that people vote for. That's why we have to get understanding with the public that we have to deal with these things in order to get support for very difficult political choices that they will not make without public support. I think it was Abraham Lincoln who once said, with public support, you can get anything done. Without it, you can get nothing done, paraphrasing. But he's right. If we don't get public support for the difficult choices, the politicians won't make them until the crisis comes. And when the real crisis that I'm worried about comes, it will be too late.
Yeah. Last question before we go to the break, going back to Trump, do you have any thoughts on this? Details are scant so far, but he mentioned something about the external revenue department service. And do you have any thoughts about that? I guess it would be to collect tariffs or something. Would that help with the fiscal deficit? Ostensibly it would, but yeah, do you have any thoughts on that?
Well, tariffs, I'm not a fan of tariffs. We've tried that in the past and had our head handed to us. Go back to the history with Herbert Hoover and the Smoot-Hawley. That was one of the precipitation events for the Great Depression. And if you go back and you look at history, you can tell what works and what doesn't work. We have a wonderful laboratory from which to learn, and it's called the real world. Yeah. And if we just look at what works and what doesn't work, we can know what we need to do. We don't do that. We are so focused on getting the goodies from the politicians and voting for people that promise us 2 chickens in every pot that we keep electing them and they keep doing the same thing, and we're going down the road to ruin. I would hope your viewers would take a look at our website, Main Street Economic, and if they have only 10 minutes, read one pamphlet that I think is germane. It's our ship of state, the USS Titanic. It's only 9 pages long, and it tells you everything you need to know about our problems and what we need to do to fix them.
Yeah. Wow. All right. Some disconcerting stuff here. Les Rubin, thank you so far for everything you've given us. We are going to take a short break, but this is just for non-premium subscribers. If you are a premium subscriber, do not touch the dial. You will be right back. In fact, we already are. And everybody else, to become a premium subscriber, visit the website contrarianpod.substack.com and sign up.
We hope you're enjoying this episode of the Contrarian Investor Podcast, where we give voice to those who challenge a prevailing narrative in global financial markets. Consider becoming a premium subscriber. For $9 a month or less, premium subscribers receive a number of benefits. Podcasts are posted immediately after they're recorded. Transcripts are made available within 24 hours. Premium subscribers get direct access to the host, and of course, there are no ads or interruptions. Visit contrarian.supercast.tech for more information.
By the way, you don't need the .tech suffix to get to that website. .com will do the trick. And we also have a Substack where you can sign up for the same prices, same benefits, same details, contrarianpod.substack.com. So if you already have a Substack account and use it, or have the app and use that, that's probably the best way to go. So contrarian.supercast.com or contrarianpod.substack.com. Whole bunch of benefits, including, of course, getting this episode up to a week early without ads or annoying announcements. And you also get the daily contrarian briefing and podcast that is released every market day morning at 7 a.m. This is a contrarian take on the events of the day ahead and what is likely to move markets, such as economic data releases, earnings, and other things. It is really good, and that is completely unbiased, of course. So check that out, contrarianpod.substack.com or contrarian.supercast.tech. Now on with the show. Welcome back, everybody. Here with Les Rubin of Main Street Economics, the website mainstreeteconomics.com. Please check it out.
.org.
.org, my bad. A lot of really interesting writing there. Les, this is the segment of the show where we ask our guests a few more slightly personal questions, specifically how they came to this station in life and their origin story, if you were, as an investor or as an academic or whatever it is. And how, so yeah, tell us about that. How did you get involved in all this and how did things transpire to take us to the present day?
My background is accounting. I was a CPA in my early career, and I've always been interested in economics. And so over the years, I've been involved with economic education. I'll go back 40 years. Now I've gotten to the concern about our economy that I think I need to create a mechanism to educate the general public. You know, I'm targeted for laymen. I'm targeting for people that are not thinking about these things day to day, and I haven't started my major marketing efforts yet. But probably later this year, I will start to market to the public. I'm a layman, and I'm talking to other laymen, and I try to use simple language that I can understand and they can understand to realize the nature of the problems. How does that carry over into investments? I've had many people ask, "Hey, if you're right, what should I be doing to protect myself?" And I have no good answer for that. I've tried. I can't even figure it out for myself, much less tell other people what to do. If we ever get to the point where the Ponzi scheme, which is our debt, collapses, we're done. And so I don't know what you do then. Maybe you have farmland and you grow your food. I don't know what to do at that point.
I mean, gold and precious metals that's what comes to mind first.
Well, I've had a lot of people talk about that, and my response is, when you get to the serious problem, are you going to shave a little gold off for lunch and have it? I mean, what are you going to do for gold if there's nobody has any money to buy the gold? In the worst scenario, the economic system collapses. We hope we never get there. That's what I'm trying to avert by getting people to wake up before it's too late. If we keep on keeping on and we run deficits like we're running and worse, someday it's going to collapse. History has never been kind to major civilizations. They've always eventually failed. I'm trying to see what we can do to avoid that happening with the United States.
Yeah. What do you think is the cause of all this? And is there a need to teach financial literacy in schools? Where do you view that?
There's a need. It's not a financial issue. It's an economics issue. People need to understand the economics of what works and what doesn't work. Eventually, as Margaret Thatcher so aptly said, you run out of other people's money. And that's what's going to happen someday if we don't get our fiscal house in order. So we need to teach economics. We need to have our kids understand how our economic system works and that we cannot go on endlessly spending money we don't have. And that's what we're doing. We're spending other people's money, and the politicians are happy to do that because they get reelected. And the people reelect them because they give them goodies. And so you're into a cycle that's difficult to break. And that's what I'm trying to get people to wake up before it's too late.
Mm-hmm. It's rampant consumerism and kind of short-termism may be an issue here as well, just because of, you mentioned Japan and other countries that have surplus savings. Americans don't really save, and we also spend more than anybody. If it wasn't for the American consumer, the global economy would collapse very quickly. Any thoughts on that? Is that an issue or not?
Well, the American economy is easily the strongest in the world, and it has been for many years. We consume a lot, we produce a lot. We are an engine for growth for other people because they sell us a lot of things. I mean, China, if we weren't buying from China, China's economy would collapse. We are consumers. We're good at that. We buy a lot of stuff. And so that is part of what keeps the world going is consumption. But in order to consume, you have to produce. You have to produce to create the income in order to be able to consume. So it's a cycle, but you have to start with producing. If you don't produce things, then you don't have any income to spend.
Yeah, it's that simple. True enough. Gosh, wow, a lot of stuff going on here. I usually like to ask at the conclusion of what is keeping you up at night, but I think I know the answer to that.
I think you know.
We just talked about it for
a
half hour, but gosh, I mean, is there any silver lining here? I mean, look, you mentioned the U.S. We do have the strongest economy in the world. We have an educated workforce. You know, the infrastructure is there. Our universities are the envy of the world. Okay, the infrastructure maybe isn't as great or even good as it should be, but yeah.
I think the hope is that what the DOGE Commission is trying to do may be effective in waking up the public. And I'm trying to reach out to those people to try and help them any way I can, because if we don't get the public to understand the issues and support meaningful change and fiscal responsibility, eventually we will have a serious problem. And as I said, I don't know when that would happen. I don't think it's imminent. But that's the silver lining. And what I'm trying to do through Main Street Economics is to educate people. I would hope your viewers could take the 10 minutes to read at least that one pamphlet, the Titanic pamphlet, where I explain all the problems in 9 pages. And I suggest what we need to do to fix them. It's mainstreeteconomics.org. The pamphlets there's several pamphlets. That's just one. They're all free downloads. And there are many videos there that I think the people would find interesting. There's a series, a little Henry series, where 30-second videos where a 10-year-old kid lecturing the adults in the room.
Cool.
And it turned out pretty cute, and I think people would enjoy it. And they're only 30 seconds each one.
Good.
There's about a dozen of those. So there's a lot of things we can do to try and wake up the public. That's what we have to do. We have to educate the public to support political change that is very difficult without public support.
Cool. All right. Yeah, that's a nice way to conclude. Maybe lastly, you could just tell the listeners how they can find out more about you. I mean, you mentioned the website, mainstreeteconomics.org. Would certainly recommend you going there. Are you active on any of the social media, any other place that you?
We have Facebook pages.
Mm-hmm.
I'm not very literate on those sort of things, but I have people that run the Facebook and the Instagrams and all those things. And we have a YouTube channel.
Great.
So all of that is available on the internet. And I would encourage people to take a hard look at our website, because that'll lead you to a lot of different things. There's articles and videos and a number of different things. I'm trying to get people to care.
Yeah.
If people don't care about this problem, then we will just keep on keeping on until the end comes. And we cannot do that to our next generation. Our kids and grandkids deserve better than that.
Fair enough. All right, Les Rubin, thank you so much for joining the Contrarian Investor Podcast today. Thank you all for listening. We'll be back here again in a week or two, I think. Otherwise, check out the daily on contrarianpod.substack.com. See you soon. Bye.
Thank you for listening to the Contrarian Investor Podcast. We hope you enjoyed this episode. To subscribe to this podcast, simply open your favorite podcast software and search for Contrarian Investor. Follow us on social media by searching for Contrarian Investor on Twitter and Instagram. Send us your thoughts on feedback@contrarianpod.com. We look forward to speaking to you again next time.